Good morning, everyone. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, gents.
Morning
Good
all.
morning.
All good?
Yeah, all good
Yeah,
in the
yeah.
hood. Another nice
Nice.
day today, by the
Yeah,
looks of things. Well, nice morning anyway.
as long as it's not windy. It was horrible yesterday, that wind.
Mm. I'm still,
Biting.
I'm
Freezing.
still deciding which friend to choose to meet.
Oh, okay.
Just one friend. There's going to
I know,
be.
I know he's a
In
bit
the
of a
pub.
bellend, but that Piers Morgan yesterday on Twitter, he was coming up with some funny stuff.
Was he?
He was saying, "Oh, so how am I going to see my kids then? I've got a plan. I'm going to employ them on a building site, and I'm going to go and work with them so I can see them."
Well, do it then. Stop talking about it. Do it. There's like
Yeah,
he was. I saw him this morning. He was asking Edwina Curry if so his cleaner's allowed to come around to clean the house. So
yeah.
why, if his son is a good cleaner, why can't he come
Could
round and
employ
clean
his
the
son.
house? Well,
Yeah,
we can.
yeah.
What's the sort of like, get him around and clean and then keep the social distancing. What's wrong with that? Nothing.
And Louis Theroux, I saw a tweet from him as well. He said, "So if you're over on a beach with one friend and you see another friend come past that does that mean you have to go home?"
Exactly. Or it's sort of like you have a five friends and you all choose one friend and you've chosen one differently, but you all end up meeting in the same place. It's
Yeah.
sort of, but obviously you're not allowed to sort of, you've got to be social distance, but I mean, it's pretty confusing, but I think common sense should just be applied. Stop sort of like making headlines, everyone. Just do what's right.
Mm. Yeah, I think we all know, don't we?
Yeah,
That
we all know, but
if you
everyone seems to be acting very confused about it. Oh, all of
some
a
people just
sudden,
need,
I'm very confused.
yeah,
I want a sort of an answer just about me. Let's deal with 65 million individual requests about who you can see, shall we?
yeah,
Get over
it's
it.
it's a little bit like that. Okay, so Ian, do you want to kick off with some FX news for us?
Yeah, all about the dollar yesterday, really. The best recipient of dollar strength, apart from the dollar index, was dollar yen, which was a little bit weird with risk off. But it was boosted because the US had a recovery in
Easy for you to say.
in 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 yields. Commodity currencies were the worst hit, so it was a bit of risk off, if you like, for the majority of the day. So obviously, New Zealand dollar, Aussie dollar, Canadian dollar were the main recipients of dollar strength. So I was just going to look at some longer term charts this morning. So this is the dollar index daily chart, and as we can see, it's just been chopped about for quite some time. Decent outside day yesterday. I think this is going to be a major barrier if we can get up here. 101.19, 61.8% fib, previous swing lows, and the top of a channel formation. I think dip buying, rally selling is going to be the theme. So I think we're going to continue to see pretty choppy trading. If you look at euro dollar, it's just in a hideous channel formation with loads of inside legs. Again, I think with the dollar index probably moving to the downside today, we're probably going to see a higher correction to the upside for euro dollar. Cable, it broke this sort of double head shoulder formation, but it's not really pushed through. And again, I think this will sort of all act as a peak for any sort of sterling dollar buying, and this is a base for the time being. I think we're just going to consolidate in that range. Dollar Swiss, again, just in a horrible channel formation. You could potentially draw a line up like that and say it's an ascending triangle formation for more dollar buying. But again, I just think it's going to be capped and just going to stay in this range for a while. Dollar yen, I mean, that was a decent move to the upside. Couldn't see any technical levels down here. I was actually looking for this AB equals CD formation lower, but I think this is going to be important today, and I'm going to talk about that on my gun to the head challenge. I'm struggling to speak this morning. 108.14 is a reverse trendline resistance, and then again, dollar CAD, that looks like weaker dollars. but there's loads of room to move inside this pattern before we get a breakout. And then Aussie dollar wedge breakout, and then we've moved all the way back up. We've virtually touched the previous swing high. Sometimes we get a retest of the wedge, but I don't think we're going to get up there. But I think the bias this morning is still for sort of buying dips while that dollar gets down to potentially a Marabouzo level, which is around about 99.60, and then we move again to the upside. So it's hold on to your pants and get ready for a choppy ride, I think, in the dollar bias, if you like, across the board.
Cool. Steve, do you want to do some commodities?
Yeah, of course. Oil, we're about 9 days until expiry of the June contract. So a lot of thought going into what happened last month, where prices zero. We can obviously see it on this chart. The price, which was related, it's a derivative of the futures, got down to $9, and we're still bearish overall. Medium term, short term, we're trading within a bit of a range between 24 and just over $27, 27.50. And we've had this similar close for the last 6 days, so pretty sideways trending in oil. Saudi Arabia surprised everyone with making another commitment to cut oil production of 1 million barrels per day, which is equal to about 1% of global supply. So that was after a conversation between the Saudi Arabia's King Salman and Donald Trump. So that caught markets by a little bit surprised, but it's just sort of like it didn't really have a massive rally on the back of it. And it's back to where it was. So it's been taken and said thank you and just carried on. Copper, we reverted from this 243 level, which I talked about. The 240 psychological level still seems to attract price action at the moment, although we've broken down through this short-term upward trending support. So I'm slightly negative on copper. Again, dollar impacting on that as well, the dollar strength. Gold, that had a little bit of a hit after the dollar strength came in yesterday. We're still within a tentative sort of symmetrical triangle formation. And I'm slightly negative this as we maybe have another swing down to retest the support. If obviously dollar continues to rally, we will get a negative price action in gold. This short-term upward trending channel in silver, again, prices didn't really get above the high here, $15.60. So again, gold strength, dollar strength should lead to more bearish price action in silver. The VIX is 27. And the only other thing really is obviously gold's real safe haven bid could return if we get a second wave of coronavirus infections from some countries. We're seeing a couple of little things sprout up here and there, but nothing that has alarmed gold enough to break away from the dollar link.
Okay,
that's it. Lovely.
Cool. As you touched upon there, Steve, there has been some limited or mixed trading in some of the indices. Global trade tensions and also the coronavirus reservations have had a bit of a negative impact on sentiment. There was some fears that there was a fresh increase in South Korea, and also there was chat that over the weekend the German infection R rate had increased to 1.13. So a sustained rate above 1 would trigger potentially a sharp case or sharp rise in cases over the next few weeks. So that could mean that we're going to be sort of in and out of tighter levels of restriction for this for some months, if that's going to be the kind of I guess the benchmark that's being set. So keeping an eye on that today, and that did filter through to equities yesterday a little bit. If we look at the German DAX to start with, I've got this 61.8% Fibonacci level, which I spoke about yesterday, around about 10,975. We did overshoot that a little bit, but it is doing a reasonable job of containing prices. We also have this level down at 10,925, which is the Marubozu level, I believe I looked at on the daily. Sorry, no, that's a little bit higher up, but that did do a good job there, as you can see on that daily chart on the test of the 50% of that candle there. So while below that level, I still think there is potential for more downside in European equities. Possibly a bit of a sort of top pattern forming there. It's not particularly great, but we are sort of fairly range bound in the first few hours of trade today. On the UK front, again, 61.8% has capped the upside. That comes in bang on 6,000. We've got this channel that's formed as well. I was looking to sell a break of 5893 today on a break of this channel and a break of that low there from yesterday in order to initiate some more selling, but it doesn't look like we're getting there at the moment, so I have to wait and see if there's any news out today that sends that the other way before we get triggered. On the US side of things, the Nasdaq continues to be the pick of the bunch from the US indices. It's trading in this nice bullish channel. Made a high at 9347 yesterday. If it breaks above that, then we could be heading back towards previous all-time highs, which sounds ridiculous, but that's just where we are. We've seen an overshoot on the daily chart. We're heading towards this 88.6% fib level at 9398, and that really will, I think, be the last line of defence for the bears if they're looking to get short. One thing I did notice on the S&P 500, which is obviously the broader index in the US, that hasn't done as well as the Nasdaq. We've seen that crash into a shorter term 88.6% level and reject. Is there possibly a bit of a head and shoulders forming here on the 1 hour chart? Potentially.
Yeah.
I think if it breaks that 2896 level, then there is some potential there for a further decline in the short term. Where would that head to potentially? We'd be looking for maybe a move down to 2840 and maybe down to 2805, an extension of that. So keep an eye on that, see how that plays out today.
Lovely.
So that is it for roundup on markets. We can now talk about our gun to the head challenge yesterday. 3 trades as always. We have trades on. We went short of New Zealand dollar, Japanese yen, short of Aussie Swiss, and short of the dollar index. And this is just share my screen.
Who went short dollar index?
Some geezer.
Oh, that's me.
So we had a 0.56R win on New Zealand dollar yen, stop out on dollar index, and a 1.44R win on Aussie Swiss. Now our trades were looking pretty good, even better than they finished up on the day at one stage yesterday. But a bit reversal into the 9 o'clock close. But that's how the game goes sometimes.
Yeah.
But nice win there for you, Ian. So it gives you the honour today. Overall, we are at 92.95%, and that P&L chart is still very much heading in the right direction. So
Is that a new? That's not a new high, is
not
it?
quite a new equity high, no. 93.37 is where we're looking for.
Okay.
So I'll hand it over to you.
Thanks, mate. Bill and Ben, dollar yen. Like I said, you've got this breakout of this channel formation on the daily chart. We've got a reverse trend line resistance at 108.14, which is a little bit off from obviously current price action, but we are looking a bit overstretched. If we go to this chart, we can see a 261.8% fib here at 107.73. We've got bespoke resistance at 107.90, so this is actually what we're trying to get short at today, but I'm going to have to go gun to the head and just go for a wide stop and small R, unfortunately, because I can't find any other currency pair that is anywhere close to where I'd want to be. So 107.56, targeting 106.66 and 108 the figure. So the risk reward is not great, but That's what it's got to be, as far as I'm concerned. So short at 107.55, stop at 108 the figure, targeting 106.60
Cool.
today.
Nicely done. Good luck.
Tom.
I am taking a look at Aussie yen. Just been triggered on that in our intraday analysis, and I posted it up as the free trade for today. Just been filled on that at that level there at 69.80. Small reaction off of that, which quite happy with. Obviously the re-entry now is a little bit off of that. We're looking at 69.73. Going to tighten the stop up a little bit for the purpose of the challenge. Going to put that at 70 on the nose, 70.00. Selling at 69.73. I'm going to target and move down to 68.80. Overall, potential there for a bit of a double top. Obviously, it's got a breakdown here in order to confirm that, but this is just very much an intraday trade today. And I think what we could be seeing potentially is a bit of a top taking shape here. So going to try and sell potentially could be a right shoulder of a bit of a head and shoulders there. So that's my trade for today, selling Aussie yen.
Lovely. I obviously like that one.
Over to you, Steve.
I'm looking at. I'm going to go with copper. Ideally, I'd like to sell a little bit higher than this, but I'm going to enter at current levels at 236.60. The target for this is a move back down to the swing low. This is after the break of the downtrend line. Potentially, you could have the start of maybe a reverse. A head and shoulders formation, which would be confirmed with a break of the 236 level. So I'm going to get on it now. A tighter stop than I would normally have, 238.60. So getting short at 236.60, 238.60 to stop. And to make things all round, I'm going to go for a 228.60 target. 4 to 1.
Got to be in it to win it.
Yes, got to be in it to win it. You can't interrupt people when they're mid-flow.
You've not said it for days. That's obviously
I know, exactly. Well, that's why I'm on a bad run. But I think the old copper might do me a favour today.
Lovely.
Good luck.
Cheers.
Okay, so day ahead, we're just on the news. I mean, obviously there was this information coming out yesterday about the R figure over the 1 threshold in Germany. Worries about the surge in cases again in Wuhan as well. That's come about in the
new
news
cases
overnight.
or something, wasn't it?
So yeah, obviously traders need to be wary of the bullish notion that economies will gradually be reopening, and obviously there's going to be these flare-ups in certain instances that we all need to be aware of. With regards to what's going on in Europe at the moment, aside from coronavirus, we've got the German Chancellor Merkel reported as saying that the German Constitutional Court ruling had great importance, reinforcing concerns over a potential rift between Germany and the EU. So that's going to continue to rumble on while they try and obviously put together some sort of support package for people of Europe. Obviously need to get the Germans on board with that, because as we discussed previously, they don't want to keep going to the bar and banning everyone out and buying the rounds.
Yeah, so that could be the second country to exit Europe.
Possibly. I mean, I think, if they go, the whole thing's dead, isn't it? If Germany aren't there,
unless Japan, China want to come in and
into Europe,
bail Europe out. Maybe that's the plan. Who knows?
Talk of also some divisions in the UK Cabinet over the latest coronavirus strategy. Obviously, Wales and Scotland and Ireland are not taking the same steps that we have with regards to easing. They are very much stay at home, in line with the sort of first line of slogans that we saw from the UK government. So that's causing a little bit of division. So although we can drive wherever we want and go for long walks now, you can't cross the border and go into Wales or Scotland to go and do that, because you're going to get a fine.
It's funny, isn't it? It's just for me, it seems like an opportunity for the first ministers of all the countries just to sort of make a name for himself. So whatever Boris Johnson was going to say, it felt like they were going to sort of go against it.
Yeah.
And they will, So you're damned if you do and you're damned if you don't. You know, if Johnson had said, no, stay locked up, don't do anything, everyone would be up in arms. And the other ministers would have sort of like said, well, we're going to give you a bit more freedom. It's just sort of like game playing again.
It is a
I
little
wish
bit like
people
that.
would sort of like focus more on sort of the, you know, the task in hand in sort of but it does feel like we could have sort of like hotspot areas, like obviously you've got London, built up areas, high
Sheffield
density
is the
population.
hotspot.
Is it sort of like
It's one of
bad
one of
there?
the highest per capita. Yeah.
Really? So I mean, it's about population density. That's what it seems to. Obviously, you know, the more people there are about, the easier it is to spread. So that's just a, you know, you might have parts of the country which are sort of like are a bit more relaxed than others.
Yeah.
So yeah, weird world we're in now.
Yes. So the only big data that I can see that's coming out today is the US inflation numbers, the CPI year on year, month on month, core CPI, all out today at 130. So that could,
Inflation still exists though.
does
I
it?
didn't. I thought that was wiped out.
Only on food
Expecting
stuff.
expecting it to
Yeah.
rise to 0.8 year on year from 1.5. That's not a rise, is it? Well, this is
Let's
a
have a look.
minus figure. Oh, it was a minus figure last time.
All right. Okay. So month on month rise 0.8. Yeah, because people have bought toilet
Year
roll.
on year.
Year on year, that is.
Year on year,
Oh, really?
0.8. Month on month is minus 0.2.
Okay.
Last minus 0.1.
So keep an eye on the US indices and USD crosses come 130 because that's where you're likely to get some reasonable activity. I think that pretty much wraps it up, gents. Not much more,
Yep.
unless anybody else has got anything else.
No, all good.
Lovely. All right. Best of luck with your trades, and we will catch you all tomorrow.
Cheers.
Have a good one.
Have a good one.
Cheers.